Hey guys, what's up? Alec back with the daily stock market, and we have a pretty red day after a strong last 2 weeks in the stock market. So we're starting to see some red days coming in. Path down 25%, Fubo down 7%, Hood down 7%. The list goes on and on and on stocks that are down over 5% or more. We even have cryptocurrency down around 3% today as well. Now, in my opinion, this is going to be fueled for a strong bounce back in the market. So I am currently buying the dip on a few selected stocks that I'm posting about on my close friends list currently. Basically saw some negative data come out on economics today. We saw consumer spending not come in as strong as expectations. We saw personal income not come in as strong as expectations. Jobless claims or unemployment come in higher than what was expected. Make sure you stay throughout the end of this video though, because we're going to be going over a very strong matchup. Nvidia versus AMD versus Intel. All right, the top three chip manufacturing companies in the world. So let's talk about them. First up, we have Nvidia. And before we hop into this, if you guys appreciate the content, just leave a like and a subscribe. Subscribing goes a long way helping us build our community, and it's totally free. So Nvidia, the first one up, we see it's at a weekly support right now of $270, and it was at a high of around $290. However, in the month, we still see it up 13% and around 30% from monthly lows. So that monthly support is, or 3-month support is what we're really looking for, around $225 per share on Nvidia. And I wouldn't mind picking up some shares under 230. Just to get a short synopsis on Nvidia, they're a huge company, 22,000 employees over in California in 1993. Nvidia Corp engages in the design and manufacture of computer graphic processors, chipsets, and related multimedia software. It operates through the following segments: graphic processing unit or GPU, and all other processing units as well. The GPU segment consists of product brands including GeForce for gamers, Quadro for designers, Tesla, and DGX for AI data scientists and big data researchers, and Grid for cloud-based visual computing users. The Tegra processor segment integrates an entire computer onto a single chip and incorporates GPUs and multi-core CPUs to drive supercomputing for autonomous robots, drones, and cars, as well for consoles and mobile gaming and entertainment devices. Okay, so there's a lot going on with Nvidia. The market cap, as you can tell, there's a lot going on. It's a $600 billion company. All right, so if you have a pen and paper, write down the market cap, 684, which we're going to compare against the other three companies, because we are going to be comparing these three companies against each other: Nvidia, AMD, and Intel. PE ratio on Nvidia, 71.9. All right, and those are the main two numbers I want you to write down for now, but just take a little bit of a note that the 52-week high is at 346, 52-week low is at 129, meaning it is a pretty volatile stock. We also have the PS and PB ratio both at 25. That's a good thing to write down. And a forward PE at 48. So first up, we have Nvidia's income statement. We're looking at net income, and we see them growing consistently for the last 5 years. However, we saw a little hiccup in 2020. So make a note of a little 25% downward movement in 2020. We'll see if the competitors had that same little hiccup. Now, we've seen in 2018, 2019, 75%, 29%, 54%, 125%. So on average, we'll say they grow about 40, 50% per year. All right, with that hiccup, it might be a little bit closer to 30% in the last 5 years, which is phenomenal. Okay, now moving on to total revenue, we see 40% gain, 20% gain, a little hiccup of -6%, 52 and 61. So on average, we can say they probably grow around 25 to 35% per year. And we see some outstanding years in 2021 and 2022, implying that their business model, their revenue, and their net income generation is just getting better and better. And in 2022, you can write down 9.7 billion in net income and 26 billion in total revenue. So their net income is really catching up to their total revenue. If you look at a little ratio of net income compared to total revenue, that's really good for Nvidia. So they're looking like an outstanding company already. They get an A. I would give them an A plus on their net income, but unfortunately we saw a little hiccup here. So they get an A on their net income. They get an A or an A plus on their total revenue as well. Moving on to the balance sheet. Now in 2022, the most recent year, we see 44 billion in total assets, which is an important number to write down, and 17 billion in total liabilities. So that debt to asset ratio is only 39%. Typically, I like to see it closer to 25% or under, but I'm not going to be, distasteful towards a 39% debt to asset ratio, especially when they have total revenue like they do and net income like they do as well. So if we dive a little bit deeper into the cash and cash equivalents and the balance sheet as a whole, we can see that their cash and cash equivalents is up 134%. Obviously, if your net income is that high, you should see these total assets and cash equivalents going up extremely high. See, that's a good thing. We see their total current assets up 79%. Now let's scroll down and look at their total liabilities on their most recent quarter. Total liabilities are up 47% to 17 billion. So we see some great things going on with the income statement, balance sheet. Let's come back to those in a minute when we go over AMD next. Now, even at the current price of $272 per share, analysts currently have them at a 30% upside in the next 12 months to around $350 per share. Now we can see that these were all reiterated 3 to 9 days ago, all 5-star analysts with all price targets above $350 per share, some as high as $410 per share. You can also see that there's a top 25 analyst coming in with a success rate of 80% hits on his price targets. His average return is around 28%. So it looks like Christopher Rowland can nail this one right on the dot. He has a $350 price target in the next 12 months. That was just reiterated. And we have many other 5-star analysts coming from JPM Morgan, Citigroup, all at $350 per share or more. We have another top 25 analyst, VJ, coming in at a top 25 and 72% success rate with an average rate of 30. And he has about a $350 price target in the next 12 months. Now we have a third top 25 analyst. Almost every single top 25 analyst has a ranking for Nvidia, and you can even see a fifth analyst, a top 25 analyst, all coming in. So these other top 25s, John and Hans, we see $400 price targets just reiterated 10 days ago and 14 days ago on Nvidia, with a 78% success rating and a 76% success rating as well on John. So needless to say, even if we see AMD or Intel coming in to be a better stock when we go over the income balance sheet, I still think Nvidia should be a solid piece of any serious stock market investor's portfolio if they plan on holding for 1 to 2 years or even longer. And remember, that's just my personal opinion, not financial advice, of course. Okay, the next stock that we're talking about, the competitor, is AMD, down 8% on the day, which is interesting for people that are looking for a good deal. Now, we also see them closer to the 3-month support than something like Nvidia, closer to that $100 mark. Okay, so I think that this is a good time to be buying AMD. Obviously, we want to be buying under $100 per share if possible, but under $110 per share, I think it's a great entry for AMD. We even see an all-time high at $160 per share, which would be around a 50% or 40% increase on AMD if we're able to get to those levels. So AMD is already a little bit better of a deal. Just looking at the PE ratio, we see it's at 46, implying that it's a little bit better of a deal. We see the market cap not nearly as big as Nvidia. It's a fraction of the size. And let's go over the about AMD. We see the employees are almost the same, 15,000. Same headquarters, founded in 1969. AMD engages in the provision of semiconductor business. It operates through the following segments: computer and graphics, and enterprise, embedded, and semi-custom. The computing and graphics segment includes desktop and notebook processors and chipsets, discrete and integrated graphic processing units, data center and professional GPUs, and development services. The enterprise, embedded, and semiconductor segment includes server and embedded processors, semi-custom, system on chip products, development services, and technology for game consoles. So you can see in a lot of ways they're different, but in more ways they're actually similar to one another, and they do have a lot of similarities. So we can see that AMD is a lot cheaper and a lot more affordable in many ways compared to something like its counterpart Nvidia. Price to book is 17, which is a lot lower. Price to sales is 8, implying it's a lot better deal than something like Nvidia. Also, the PE ratio forward PE ratio is 27, which is almost half of Nvidia. So in just looking at these numbers, the PS, PB, PE ratio, which are some of the most important numbers and ratios to look at when seeing if a company is overvalued, we can see instantly that AMD is about 50% off of something like Nvidia. Now, with that being said, we have to look at the income, total revenue, and balance sheet, because that might paint a bigger picture, a lot different picture. Maybe there's a justification of why Nvidia is so expensive, and we can kind of see it right off the bat. You know, look at their net income compared to something that's more fluid than Nvidia. Nvidia is more consistent, where something like AMD is up and down and up and down. They had a huge hiccup in 2017. They went negative, all right, negative 1 billion. So what the heck was going on there when Nvidia was killing it? And then we saw in 2018, they only had a profit of 300 million, which was obviously good from going negative. But I wouldn't really look at those first 3 years at all, because that paints a horrible picture. 2017, 2018, 2019, I wouldn't even want to see a company like that at all. So 2020 and 2021 is really when it starts to get interesting, and you can't really calculate that 600% growth just because they came from such a small amount. I mean, you can, but you can't. At the same time, from 2020 to 2021, we only see a 27% growth. So AMD might be a little bit cheaper, but the net income is significantly better. I would give this income statement for the last 5 years like a C or a C minus. Okay, maybe a C plus, actually, just because they have shown resilience, incredible resilience in 2020. Now, if we look at the total revenue, this is where it gets interesting, because they've been consistent, and their total revenue, I would give their income statement on total revenue an A. All right, so it's right up there with Nvidia. 2017, 2018, growing 20, 23%, and then 3%, 2019. Remember, Nvidia had a hiccup that year, while AMD was actually still able to grow their revenue, which is interesting to think about. 45% growth, and then most recently 68% growth. If we actually look at their more recent dates, their total revenue is now 4.8 per quarter. So that's right on track for around 16 billion per year. But the net income is not translating the same way as Nvidia is. Remember, they were like 1/3 of their total revenue was their net income. AMD, for example, they have 16 billion in total revenue, and they're only getting 3 billion in profits from that. So they're not as profitable of a company as well. Now, if we go down to the balance sheet, what we'll see with the balance sheet is it's not as good as something like Nvidia, where the debt to asset ratio is a lot lower. If we look at the cash and cash equivalents, it's up only 58% compared to Nvidia, which was up like 150%. Now, if we go to total liabilities, that's also up 57%. So I would give their balance sheet like a B. Nvidia's got them beat on balance sheet and they got them beat on net income. So overall, how I view these two against each other is Nvidia is more of a safer bet for 2 years out, going forward. AMD is more of a wild card. They have more risk, but they also have more reward because remember, they're a little bit cheaper. Their market cap is smaller than something like Nvidia that's already been built up to the level that it is at currently. Now, looking in what the analysts have to say about AMD, we actually see a 37% upside to $150 per share in the next 12 months, which I think is definitely achievable. Remember, they were at $160 per share last year. So in the next 12 months, I easily think with the growth, if they continue the growth, and if we see who is actually going and rating them, we see a lot of 5-star analysts and a few top 25s coming in as well. And Hans has them at $200 per share, which would be around an 80-90% growth on the share price. We have a Goldman Sachs analyst coming in, and then we have Christopher Rowland coming in again at $180 per share. All right, this was all in the last 25 days, but Hans put his review in at for $200 per share just yesterday. Okay, now we also see some other top 25 analysts coming in saying that $140 per share is achievable, but I would really look at the more recent ones. These ones, we don't have as many analysts as Nvidia, but there's still huge potential with something like AMD selling above $150 per share. And if you can even sell closer to that $200 mark in the next 12 months or 18 months, I think that's a big win for AMD holders. And our last contender of the three, Intel INTC, down 3.6% on the day. We talked about this one recently on the channel. Okay, I don't think it's as primed of a buy as AMD. I think is the most primed and ready to buy out of the bunch, just because it is close to that 3-month support. So if we see Intel closer to $44, $45 per share, it's going to be a different story. If we see Nvidia fall another 10, 15, 20%, it's going to be a different story. With that being said, scrolling out, we have Intel at a 1-year support, a 1-year low. They're actually down 22% in the last 12 months. But we see them at a 5-year support if it does hit that $45 mark, which is why I do like that spot to load up. I constantly load up and sell Intel. They're more of a short-term swing trade, actually more of a mid-term swing trade. They're about the same size as something like AMD with a market cap of $200 billion. The PE ratio is significantly lower than the other two, implying that it's a lot better of a deal. And we also have a sweet dividend yield of around 2.7% coming from Intel just from holding if you're into that long-term gains. We also see them not as volatile as the other two, more of a stable stock. If you look at that 52-week low compared to the 52-week high, 43 to 68, doesn't go as much as the other two. Now, we also see the same headquarters as the other two. We see 120,000 employees. Intel Corp engages in the design, manufacture, and sales of computer projects and technologies. It delivers computers, networking, data storage, and communication platforms. The firm operates through the following segments: client computing groups, CCG, data center groups, Internet of Things group, non-volatile memory solution group, programmable solutions, and all other things. The CCG segment consists of a platform designed for notebooks, 2-in-1 system, desktops, tablets, phones, wireless and wired conductive products, and mobile communications component. The DCG segment includes workload optimized platforms and related product design for enterprise, cloud, and communications infrastructure market. The Internet of Things group segment. So you can see in many ways they are different and they are more of its own thing. So when you're comparing them, AMD and Nvidia are more alike and Intel is more of its own thing. Now, just looking at which one's the best deal, this one's by far the best deal. The PE ratio is at 10, the forward PE ratio is at 14, the PS ratio, price to sales, is 2.5, and the PB ratio is 2.1, implying this is by far the best deal of the bunch. And if it gets down to $45, $44 per share, in my opinion, it's a no-brainer, and I'll probably even be taking out call options at that point if we see Intel at $45 per share once again. Now here we can immediately see why it is priced at such a cheaper price. The net income is baby compared to the other ones. You know, in 2017 and 2018, it had its thing going, up 45%, up 38%. And then 2019, 2020, 2021, they just haven't been doing it for Intel, okay? AMD and Nvidia have been seeing explosive growth over the last 2 to 3 years, while Intel has been seeing quite the opposite. If we go over to total revenue, here we see 5%, 12%, 1%, 8%, 1%. They're not even a double digit. So I would give their total revenue a D minus, or no, probably like a D, just a flat D. And then their net income is going to be getting an F, maybe a D minus. Okay, just because 2018 and 2017 it was doing good, but the last 3 years their net income has fell off a cliff. Their revenue hasn't been growing at all. You know, now they are doing 79 billion in revenue, which definitely is saying something. Their revenue is there. They're doing 19 billion in net income, okay, which is more than AMD and more than Nvidia. Remember, Nvidia's net income was like 9 billion and AMD's net income was like 3 or 4 billion. And we see Intel at a net income of 19 billion with a smaller market cap at a 5-year low. So that's what it really has going for it right now. It doesn't have the growth. Obviously, it's not growing. You know, in 2017, 2018, it had 20 billion in net income. So if we continue to see that net income grow from 2018 and beyond, we would probably see something more of like a Nvidia on our hands. I'm pretty sure Intel is losing customers, and I'm pretty sure it lost Apple, which was like its biggest customer for total net income and total revenue. Okay, now needless to say, this is still a great deal if we see them at 45 because they have such high net income for such a low market cap. They have such high total revenue for such a low market cap. That's why we see their price to sales ratio low. That's why we see their forward PE ratio, their PE ratio relatively low, because they are a great deal for how much net income they're still bringing in year after year and how much revenue they're bringing in year after year as well. You probably won't see as much extreme growth as something like Nvidia or AMD, but if Intel gets a new customer or they find a way to boost their revenue or their net income by 10, 15, 20% year over year for a few years, we can see some explosive growth in Intel. We also see a pretty good balance sheet, but not as good as the other two. And Intel is more of a wild card of the bunch, especially when it comes to what analysts think. Only 8% upside over the next 12 months. You know, it might be good to run an option. That's what I was saying on this one, because it's not as volatile as some of the other ones. And they also see it as low as $40 per share in the next 12 months, which I disagree with. Even though we see Hans coming in saying sell $40 per share is incoming in the next 6 to 12 months. And we really don't have too many analysts on this one. What the analysts are probably really seeing right now is the partnerships dissolving, some of their most important partnerships with Apple. They're seeing that they haven't been able to grow their revenues. They haven't been able to grow their net income. Those are some of the most important things when analysts have to look at too. So with that being said, Intel's by far the most wild card. AMD is the one if you want more growth. Nvidia is basically a safe bet over the next 2, 3, 4, 5 years. Nvidia, I think, will be around for a long time. AMD has more ground to catch up, and they can make a big name and they have more growth potential too. So I hope that wrapped everything up for you guys. If I had to pick one to buy at the current price, it would probably be AMD, just because, you know, it's closer to that 3-month support. I like Nvidia better overall as a company, but I want to see them down 10-15% more before I stick a large amount in. So AMD is the winner of this video if we're looking at what I'm going to be buying like tomorrow or this week. However, overall, my overall pick is Nvidia. Let me know if you guys want more videos like this where I compare some of the big name stocks against each other, some of the rivals. Okay, we have a lot of other stocks to compare against. So smash a thumbs up on this video. Comment what you guys want to see next. Remember to continue to lean into the fear and be buying the dip. If you guys like how I talk about stocks and want to learn my style and how I look for stocks, not only learn, but also see what stocks I'm buying, when I'm buying, how much I'm buying, go ahead and message me here on Instagram. I have a few more spots available for my close friends list before I start raising the prices, because as you guys know, right now is a little bit slower in the stock market, but as soon as things start heating up, which can come in the next week or two, everyone starts to pile in the close friends list all at the same time, and I end up having to raise prices that way. So if you still want the early bird discount on the year, go ahead and message me and we'll help you out. Send you over my website so you can take a look at everything yourself and see for yourself if it is a great fit. All right, share this video with a friend if you think that they will find it helpful. I'll see you guys in the next video. Drop a thumbs up, drop a subscribe if you haven't already. What are you guys doing? Make sure you're subscribed, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.